Hey guys, hope everyone's having a nice day. Today I just want to talk about some market news that I find interesting, as well as looking at some stocks that have reported earnings and also looking forward for the next week of earnings. Looking into last week, we actually have ASML, TSM, and Netflix. ASML obviously had a huge rundown despite beating earnings in both revenue and earnings per share because the leadership was very uncertain about the guidance. Looking at the month to month, ASML is down 10%, but looking at the valuation, a PE ratio of 27, I think now at around the 700 to 710 mark, I think it's a really good to enter into a position. I myself have a sizable position in ASML and I'll be adding more into it. Despite the market reaction about the guidance, I think ASML is still a good buy today because of the unique position it finds itself in the industry as a monopoly in lithography. So yeah, I'll be closely looking at ASML and maybe in the next week or so adding more into the position. Google also had a very interesting earnings. They had a really strong earnings actually. They beat both metrics by a very comfortable margin, and the price has actually run up. I mean, in the past month from 180 or so to where it's at 193. But I think Google at the current price point is still really cheap given what Google does. Their dominance in search, their continued investments into AI. At a PE ratio of 20 for a company of this size, I think it is really, really cheap. Even looking past the fact that it has run up maybe 10% this month, a really good value. Looking at the price to earnings ratio, 20.58 for the trailing 12 months, it is kind of crazy for a Mag 7 stock to be trading at this PE ratio, and especially when they've been so dominant in the space that they're in Google search, in AI and stuff. Looking at the valuation, it has actually gone down quarter after quarter. There is a lot of downward pressure on the stock right now due to the DOJ investigation and the ChatGPT and all these LLMs. Diving deeper into the earnings report, I mean, yeah, like I said, revenue 14% year-over-year growth, very consistent, and the operating income of 32.4%, which is really good. Looking at this slide is really interesting because it's about the Google services segment of their business, and which obviously includes Google search and YouTube and Google network and others. The story before the earnings was that Google search would become less significant because of LLMs, ChatGPT and stuff, and there was a lot of talk about Google being, or at least Google search being, a 10 blue links website, meaning it's just a website that shows 10 blue links. Obviously not so. Looking at the graph, I mean, Google search has been growing quarter after quarter so consistently and continue to show their dominance. Before I invested in Google, I also thought the same thing. The bear case was really reasonable to me because ever since ChatGPT came out, I hardly go to Google search just to search for an answer to a question that I have. If there is a complex question that I have, I usually find it very easy to just go to an LLM and type in the question that you may not find like a direct answer to on Google search. And that is true. LLM has been very helpful and has been taking users away, but I think Google search is so much more than a 10 blue links website. Google obviously has their own AI, their own LLM called Gemini, and Gemini is becoming a bigger part of Google every quarter. Just looking at the Google Cloud revenues and Google services, the growth in Google Cloud is unprecedented. The revenue and the income that they get from Google Cloud services is accelerating, and Google Cloud is becoming a bigger part of Google's business and their revenue each quarter. The narrative about the growing Google Cloud segment continues here. I mean, looking at the last quarter, they spent 22 billion on capex, which is kind of an insane amount if you think about it, and it represents a 70% year-over-year growth. I think it shows Google is committed to growing the cloud segment, is committed to building up all this infrastructure to support all the cloud services that they aim to sell. And for investors like you and me, I think it's really good news because Google is accelerating its other business segments like cloud. Their commitment to do so means that Alphabet will continue to see growing revenues, growing earnings per share over the next few years or even the next decade for sure. So I'm still very bullish on Google, and yeah, I'm really happy about their performance. This may or may not interest you, but for the last segment, I want to talk about the stock market in Singapore. So we had this news a few days ago about the stock market in Singapore and how the Monetary Authority of Singapore wants to invest actually quite a sizable amount into the stock market. And here it says $1.1 billion allocated to 3 fund managers to boost Singapore's stock market. And down here, the caption says, it's part of the 5 billion set aside under the equity market development program announced by the MAS in February. A really positive news for the stock market. A really good move by the MAS. Ever since I started investing maybe 2 or 3 years ago, and that has been the story for quite a few years. The stock market has not much liquidity, not much volume, and the barriers to entry into the Singapore stock market is, in my opinion, still kind of high. There exists a high barrier of entry into the Singapore stock market, which is not good for investors like maybe you or me, because retail investors can't access the stock markets and there's not much liquidity. There's not much security to enter and exit your positions. So this is SGX. SGX stands for Singapore Exchange. It is a good representative regardless. If you know Singapore stock market, you know that it's been trading flat for, ever since 2007. It has traded almost flat at around $10. I mean, a few days ago, they have appointed these 3 fund managers. A 1.1 billion will be allocated to 3 managers to invest in the Singapore stock market in a move at deepening market liquidity and rebuilding investor confidence. And those two are the main pain points when it comes to retail investors in Singapore. I'm using DBS as an example. DBS is a bank company, and I think it's the largest in Singapore. And they post good revenue quarter after quarter. They give good dividends. As a retail investor in Singapore, obviously you would be tempted to buy DBS, and currently it's trading at close to an all-time high at 49.06. The thing with the Singapore exchange is that when you want to buy a stock, you have to buy it in lots of 100. So this $49 is actually $4,900 if you want to buy, which is a very high barrier of entry for retail investors, like for example a uni student or a high school student who just wants to try out investing. We do want to see more participation from retail investors, not to see the stock market as short-term punts, but also how to make long-term investments to grow their nest egg, and will be helpful for people to provide better retirement adequacy. And I think this is a good move for Singaporeans in general, because Singapore is struggling with inflation. Lowering the barrier of entry into the stock market, it will open up an avenue for them to seek to grow their investments aside from government vehicles like CPF. This will help the fund managers come up with new portfolios that retail investors can invest in, for example unit trusts or money market funds or ETFs. And yeah, obviously I think this is a good move by the government to revitalize the market and also to bring in retail investors. Another great aspect of this strategy is that it improves the appeal of the Singapore exchange to the surrounding region. The Southeast Asian countries also suffer from the same problem that SGX has suffered, maybe to a higher extent. I think SGX, by committing to this investment, can bring in all those retail investors, not only from Singapore but also from the surrounding regions like Malaysia, Thailand, Indonesia. That will just further accelerate the quality of SGX. And yeah, that is it from me for now. I'll be looking closely at the coming weeks. Depending on their earnings, I may make another video to talk about them as well. If you have any stock that you want me to talk about or share my views about, then I would be more than happy to hear you out. Thank you.